Today, I'm breaking down the only tool you need to consistently catch high probability moves in crypto, forex, stocks, literally any market. And yes, it's a Fibonacci setup that can reach a 100% win rate when applied correctly. This isn't magic. This isn't guessing. This is pure market structure powered by human behavior, fear, greed, and repetition. Here's what I trade. I use a simple Fibonacci grid drawn on the impulse move. 0 and 1 mark the boundaries of the impulse. 0.236 and 0.382 are my entry zones. 1.272 and 1.414, my take profit zones. And the legendary 1.618, that's where trends often exhaust, wicks appear, and reversals begin, as long as we ignore news spikes and those unpredictable liquidation wicks. And the best part, these ratios work on any asset, any time frame, any market, because price naturally repeats the same proportional movements over and over again. Today I'll show you this system step by step, apply it to Bitcoin's current chart, and run it through historical data so you can see exactly why it performs the way it does. Let's dive in. Alright, let's start from the top, the monthly chart. To understand why this Fibonacci setup works so perfectly, we need to look at how price behaved during one of the strongest market shocks in recent history. I'm talking about 2020, the COVID crash. On the monthly time frame, Bitcoin formed a massive accumulation zone. Price kept hovering around the same level, building pressure, creating a base. And from that structure, we got what many traders call a breaker block. Here's what happened. Price traded sideways near that key level. That's your accumulation. Then it ripped through it with a strong imbalance move. That breakout confirmed the breaker block, and as always, price came back to retest the same level it broke. That retest was clean, precise, and exactly what you expect from a proper structural shift on the higher time frame. And this is where Fibonacci becomes insanely powerful, because these impulse and retest moments create the perfect boundaries for the grid. We just saw a clear liquidity sweep, and that tells us one important thing. Our stop is sitting in a protected zone. There are several scenarios where a stop can be considered protected, and this situation fits perfectly into that category. Once liquidity is taken, the market often treats that area as completed business, a zone it no longer needs to revisit. And remember one of the market's core behaviors. Price loves to return to Fibonacci levels. It gravitates toward them, tests them, and snaps back as if pulled by a magnet. That's exactly what we're seeing in this example. A sweep, a reaction, and a natural pullback toward the fib zones. A clean illustration of how price respects these levels time and time again. And this pattern repeats itself absolutely everywhere. Let's switch to the weekly chart. No need to look far. In a recent situation, we saw the exact same thing. The market formed a breaker block, and it did so while meeting the same conditions. Specifically, a clear liquidity sweep. On top of that, an inverted head and shoulders pattern appeared. When a head and shoulders forms, we pull the Fibonacci retracement from the shoulder, because in that case, the stop is also considered protected. And look at how beautifully price reacted. It tapped our entry level almost to the exact cent, and later moved to the take profit with the same near perfect precision. Alright, let's break down the current situation on Bitcoin. I know a lot of you have been waiting for this. Right now, we've got the opposite setup compared to the previous examples. We formed a level above, liquidity was taken, a breaker block appeared, and we also got a shift in market structure. A BOS, whatever term you prefer. From here, price can continue lower, following this projection. This is a short side Fibonacci setup, and according to the rules of the system, everything lines up correctly. The take profit aligns perfectly with a previous meaningful price level, but if you're extremely bullish and you don't believe in the short scenario, there's another valid possibility. Price can easily move up from here as well, because we have a mirrored setup on the other side. The same type of level, the same liquidity sweep, the same reaction. So yes, price could launch into a long from this zone and potentially head toward the $150,000 area. Which scenario you trust more, that's entirely up to you. Now let's zoom in even further and look at the 4-hour chart on Bitcoin. Here we get our entry, a clean, precise setup formed through a bullish price rejection. Once again, price reacted almost to the exact cent, just like it always does. We absorbed the entire downside move, which signals strong buying pressure. In the current situation, price can easily hit the take profit right away, or it may offer an opportunity to tighten the stop like this. So at this stage, everything has to be be monitored in real time. I'll be updating all of this in my channel as it develops. We had the exact same situation here as well, and I mentioned it in our chat before the move happened. We caught the short perfectly. Price took the liquidity, then came back and tapped the Fibonacci level with absolute precision once again. So that brings us to the end of today's breakdown. The market keeps repeating these patterns, and as long as we read the structure correctly, we stay one step ahead of the move. Now the real question is, what should we analyze next? Where do you want the next deep dive? Should we take a closer look at the euro, maybe Ethereum, or something completely different? Let me know what you want to see, and we'll break it down together in the next video.